Alright guys, yesterday I spoke on at the beginning of the video about Adam Aron, and it seems like a lot of things are stirred up on Twitter as well between Tara Bull, between AMC Bigums, etc, etc. And you have to understand that we have to nitpick at certain things and have a conversation about them without being blasphemy towards each other and versing each other, or else we will not be making it anywhere. So in this video I'm going to provide some things as the collapse in the financial market continues and what it means for AMC. So without further ado, all I ask you to do is hit the like, drop a comment down below what you think about this whole Adam Aron situation and the video in general, and also drop a comment what number like you are for the video. Let's get into it. Alright, so ARK Invest CEO Cathie Wood urges Fed to stop raising interest rates in an open letter. You can only guess why she urges the Fed to stop raising rates, but it could be because of global margin calls or liquidity issues. See, global margin calls hits European debt market. Risk gauges in Germany's government debt market rose last week to levels higher than recorded in the 2008 world financial crash, as margin calls forced the liquidation of derivatives positions held by banks, insurers, and pension funds. The derivatives market is a huge market by banks, insurers, pension funds, institutions, including Citadel, and the debt market just rose to levels higher than 2008. Again, we talked about how everything is falling worse than 2008 and will fall worse than 2008. The Federal Reserve posts first operating loss in years. While a central bank cannot go bankrupt, going into the red is the icing of the cake of what's been a rough year for the Federal Reserve. It is still battling inflation, with multiple financial experts and organizations worldwide criticizing the Fed for raising interest rates to combat inflation. The bank has made billions in extra interest income from expanding its balance sheet in the years since the financial crisis. Not only that, but the EU's top diplomat is warning the Federal Reserve rush for higher rates risk tipping the world into a recession. And just in, Fed President Evans says he expects interest rates to slightly rise above 4.5% in early 2023. The head of the world's biggest oil producer, Saudi Aramco, has said that the world should be worried about oil supply limitations last week. Wall Street banks slashed $34 billion from earnings forecasts. And finally, an analyst says 50% chance of a new market low in the next coming weeks. Also, the bank we expect to default at some point because they are moving in the opposite direction as the Fed. Bank of England doubles its temporary QE bond purchases to 10 billion per day. We talked about the chart moving up, where the earnings season coming down, bonds going up. There is going to be no incentive to purchase stocks, as bonds have ultimately almost no risk attached. But let's talk about this quote-unquote bear market low. Just to touch on something, the collapse is continuing in my opinion, and we are ever so slightly holding this trend line on the S&P 500. If this were to match 2008, we will get a slight pop over the next coming weeks before ultimately reaching a market bottom. Keep in mind, this can come sooner because history does often rhyme, but it doesn't have to completely repeat itself. Now, this is something I'm expecting for GameStop. I'm expecting a move to the downside, even though this does look slightly bullish right now. I'm expecting a move to the downside within these parallel lines, somewhere around 18 bucks. Move back up, and then something that looks like this before ultimately having another shot at GameStop ripping. And of course, even if I overlay the cycle, you will see how close this looks. It's going to pop in the trend lines. It's going to get a deep low before a move back up. This is all in my opinion. Nothing I say is financial advice. This is ultimately just what I'm expecting. As for AMC and what I spoke on yesterday about Adam Aron, I'm going to address some of the comments here by just asking you a question. If the CEO of AMC has stated that there is no reliable evidence of synthetic shares and he doesn't know what we're talking about, even though his company's stock price went from $70 down to $6, when it was at 70, he stated, okay, shareholders own 90%. Now he stated shareholders own 80%. So how come we had a drop from $77, $72 down to $6 with only a 10% decrease in shareholders? That's the first question. Now the second question is, the incentive for Ape was not only dilution to him, which we denied twice, he also denied 2 months before Ape was a thing and listed on the NYSE, extra payment for the CEO. He then came out and said checkmate, and the incentive in Ape for shareholders was that this would give us an accurate share count because it went through ComputerShare. Well, guess what? The first day, there was 43 million failure to deliver, as early as it could have been, and he hasn't spoken on this one bit. How come, and what would you do next as a CEO? Now, a lot of people are going to bring up, okay, well, it's the legality of what he can say, but there are several CEOs that came out publicly and talked about naked short selling and what shareholders do and this and that amongst their company. So just, guys, let me know in the comments what you think. Without further ado, please smash the like, hit that subscribe button, and turn post notifications on. Get your 10 free stocks linked in the description down below and pinned in the top of comments for downloading Moomoo and depositing 100 in there so you can trade. You will also get access to free level 2 order book, trading options, going short, access to other markets, etc, etc. And make sure to also use MEXC Global using my link to get several discounts trading futures, crypto, etc, etc. I love you all. Lottery Stocks out.